Thank you, Peter, for being with us.
Thank you for having me.
It seems that on the last couple of months we have seen the Treasury yield going up. This is a sign that the QE is coming to an end, so it was expected. But also the dollar, it's strengthening towards versus the yen and the euro. So I would like to know what's going to be the impact of this dollar revalorization in the U.S. economy.
This is a phenomenal story right now. We're seeing the U.S. dollar strengthen. It's been a trend for since the beginning of the summer. Right now, Morgan Stanley's chief investment strategist, Michael Wilson, believes that we're entering a multi-year bull market for the U.S. dollar. What we see going forward with a strong U.S. dollar is that the United States is an import-dependent company versus exports. Therefore, the stronger dollar will continue to bring down the cost of commodities. We think that impact on corporate balance sheets will eventually be passed on, or hopefully passed on, to the U.S. consumer. As the U.S. consumer is 70% of our growth rate, that once that starts to get passed on to the U.S. consumer and the strong dollar, that we could start to see some real growth acceleration going forward.
And talking about the dollar, we'll see an impact in the medium term in U.S. corporates. But let's take a look to the third quarter earnings. What are the projections for Morgan Stanley for the third quarter earnings?
We're still just riding the trend line in the right direction. We're right now, again, Michael Wilson is looking for 7% earnings per share growth. So not necessarily looking for grand slams or home runs, but we just want to continue to see the trend moving in the right direction.
And just a last question. Some investors say that U.S. equities are overvalued, are overpriced. But I would like to know what Morgan Stanley expects for the S&P 500 towards the year end. Which levels are we going to see for the end of the year?
So we hear that every day. Everyone thinks that stocks at these levels are overvalued. However, we continue to see opportunities in the markets. We're still optimistic, just like we had spoken about the multi-year bull market that we may be entering in the U.S. dollar, stronger U.S. consumer, jobs and employment trends going in the right direction, and just better growth in general after obviously a disappointing first quarter. But going forward, the base case was 2014 for 2014 at the end of the year. There is a bull and a bear case, but we want to stick to the base case scenario at this point, 3.1% growth for the full year and around a 2014 price target on the S&P.
Fingers crossed. Thank you, Peter.
Absolutely. Thank you.
Y a nuestros electores.